Ignition sequence starts. 6, 5, 4, 3, 2, 1, 0. Liftoff. We have a liftoff.
Hey everybody, this is the Digital Asset Investor, and today I'm going to tell you what the dirty little secret is in crypto, okay? The dirty little secret I'll get to in a second, but first I wanted to show you this from Link2, who is one of my sponsors, and I'm going to have a link to this in the top of the description. This is from Nick Burafado over there. He says, our originations team found a limited number of Ripple shares before a pending price increase happens. Today's minimum is $10,000 and maximum Ripple Labs investment is $100,000. Wire or Uphold wallets, qualified download app, 24 hours of XRP, $1,000 XRP drop till midnight. Okay, now let's get into it. I stumbled across this video. This is Mike Novogratz in Australia. And I wanted to show you this clip because I want you to understand. First of all, you've got to understand Mike Novogratz is Goldman Sachs. Okay, he was there for years. I've watched a video of him before where he said that once you're in Goldman Sachs, then you get invited to the annual meeting and whatever, and you're in the club more or less. Okay, these guys are Wall Street. And I'm playing you this clip to make you understand. Well, first of all, I've told you 1,000 times on this channel, governments created Bitcoin. And this is part of the dirty little secret. The dirty little secret is that Bitcoin was created by some guy named Satoshi in his bathrobe, and this is some libertarian movement. It was even written into the code. And that is the big lie. That's one of the big lies. The other big lie is the Ethereum decentralization lie, but we'll get to that too. But I wanted to make you understand, Mike Novogratz and these Wall Street guys, they knew that Bitcoin was a security and that Ethereum was a security from the very beginning. That's why they needed the SEC to do their thing and to get them out from under securities laws. Listen to this clip. You don't have to take my word for it.
And, I got involved in Bitcoin in 2013, and it was, the Bitcoin white paper was written after the great financial crises, and Ethereum was written really right around the year.
Don't forget, the financial crisis, I believe, is when Wall Street knew and the government knew that the gig was up. They were bailing out their friends, and then at that point, when you're bailing out your friends, you know that you've got a problem of a potential lack of trust by the citizens out here. Well, what do? Maybe you release Bitcoin and you make it look like a libertarian movement by someone who hates what the government just did.
Financial crises, and if you're macro, there was this big fear at that point of QE1 and QE2 and hyperinflation that was coming. Funny that 10 years later we're going to actually get it, but at that point the fears were real. And so when I stumbled across Bitcoin, I started thinking, here's a new security, or don't dare call it a security, but it felt like a security to me, right?
Don't dare call it a security, but that's what it is, and I know that's what it is. That's what he's saying. And I also know that Ethereum is a security, okay? But what did they have? Remember this tweet I saw this morning. This is from the SEC came up with the decentralization narrative, and that came from Steven Narioff, I believe, who helped to create the Ethereum back when they first started. He helped to get Ethereum, to get them the piece of paper in their pocket before they did the ICO. But listen to this. This was Joseph Lubin.
And the potential pitfalls, especially as the technology is not fully mature. The SEC in the United States looked at a whole bunch of issuances of tokens, and they decided that some of them were acceptable, did not represent the issuance and sale of securities to Americans.
Well, I'm telling you here as I sit here, this decision that Bitcoin and Ethereum were going to be out from under securities laws, this was a government this was decided a long time ago. And now what you have is you have Gary, who has been sent, and his job is to make sure if you think about it, if you take a step back and you look at this, what they have done is they've created this Bitcoin and Ethereum monopoly. And now Gary's job is to help solidify this and now hand this asset class over to Wall Street. That's what his job is. Watch this. This is from the CEO of the NASDAQ.
You have meetings
today. This is today on CNBC.
About with crypto. What do you say? How do you, considering that some people use that as a risk-on tool at this point, we've even had technical analysts say that the NASDAQ stocks are following what happens in crypto. How do you maximize your participation there, or do you?
Yeah, well, I actually think we look at it a little bit more generally to call it digital assets, but including cryptocurrencies. I think that we are starting to see that kind of enter more into the institutional mindset, as well as the retail mindset in terms of people wanting to get engaged in those asset classes. But it's a really inefficient ecosystem, really inefficient. A lot of friction costs. So as we look at, we are a market operator, but we also provide technology to other markets, including crypto exchanges. We can make them more efficient. We can provide them our surveillance technology to make it so that they kind of consider investor fairness. Our anti-fin crime platform now has a whole digital assets.
Those are all sort of on the outside.
Right there,
you're helping, but you're not diving in.
Right. And then as we continue to see the crypto markets evolve and mature, are there things that we can do as a market operator to help that maturity? That's a possibility. But right now we're really looking at it more for all the other services we offer. And that's been a good growth area for us.
So think about what you've been asked to believe by these people. Look, all they've done, if you really look at it, all they have done is they are guiding the sheep through the digital door. And they did it, first of all, they disguised the creator of Bitcoin. It's some anonymous person. Then they disguised the Ethereum whales. So think about what the powers that be have done. These are Wall Street people, folks, in conjunction with the government. They have literally disguised something as a decentralized movement that is completely centralized and controlled by them. And now Gary is in charge of handing it off to Wall Street. He's the guy who's going to decide, okay, any of these little crypto exchanges, yeah, you helped us get here. But now I'm going to pick and choose who gets to play in this game. And all of Wall Street's going to get to play in this game. And they've been setting up their custody for the last 2 or 3 years. And folks, I didn't just come to this by waking up this morning. I've been watching these lies for years now. Every day, 2 to 3 videos a day. And it all has come together in my mind completely. You've got an entire Bitcoin movement who has been sold the lie that this is some decentralized movement that has been created by some guy, I always say in his bathrobe, and you think they wrote in that Bitcoin code, there was some reference to the bailouts. You think that was an accident? That was by design. That's how you get the Bitcoin movement. And so here's what I ask is wait till all the Bitcoin maxis realize their libertarian movement has been co-opted by Wall Street. Dirty little secret, they were behind it all along. That is what this is. That is the reason that you have all these powerful lobbying forces. That's the reason that they have to ignore what we're saying. Notice that they never acknowledge what we're saying out here. The Bitcoin crowd, the maxi, well, some of the Twitter sphere people do, but I'm talking about the people that are the lobbyists. The Chamber of Digital Commerce, they can't respond to us. They don't respond. And the reason they don't, all these people don't respond because they can't. They know that we're we know exactly what's going on here. And it's not just me talking. Brad Garlinghouse weighed in today. No, John Deaton said, to this, let me make sure I'm being accurate, to this, when I said, make no mistake, Gary's primary job is to hand the new crypto asset class off to Wall Street. John Deaton said 100%, DAI is 100% on. Now, let me make another point. So this was the video I put out yesterday. Look how many views it's got. The number of views tell me that the Ethereum people probably are getting nervous. I'll play it one more time, then I'll go over what John said.
You are going to see similar companies not subject to the same scrutiny from a enforcement point of view. And it's just a matter of jurisdiction, bandwidth, and the like. There's no inherent unfairness in that. It's, who draws the attention, et cetera. And people who are, similarly situated, and one is subject to a regulatory action in some jurisdiction and the other isn't. The one who isn't, may be getting a pass for the moment. Doesn't mean they're going to get a pass over time. In fact, if you see someone who is a similar situated product, subject to an enforcement action, you better expect that may come for you.
See, now the reason he's saying that, in my opinion, I believe that the one thing that they didn't count on is when they dropped that Ripple lawsuit, they didn't count on the noise that we would all be making out here. And I believe that it put them in a position where they now have to do something that's going to give the appearance of going after Ethereum, when actually they're only going to do it once Ethereum is past being able to really be affected by it. They're going to do something that's symbolic only, and that's what I think that they're going to do. I think that they have to do it to have the SEC have any credibility anymore. I think that we interrupted their dastardly plan. And John Deaton says, earlier today I spoke with Crypto Wendy on her show, and we discussed the importance of the XRP Ripple case and the impact an SEC victory could have on altcoins, including ETH. If I were an ETH holder, which I am, this would concern me. Now, check this out. Vitalik Buterin was tweeting something about Elon Musk and Twitter and all that. And there was a dialogue. This guy asks Jack Dorsey if he wants to look at his project. And he says, if you're building on Ethereum, you have at least one, if not many, single points of failure, and therefore not interesting to me. Of course they do. It's a defective product. I wanted to show you this just because it caught my attention. This guy's talking about how mortgage rates are going up. And make no mistake, folks, you are going to see a real estate collapse sooner rather than later. When interest rates are going up like this, when they've been artificially low for all this time, you're going to see this happen, folks. But he says BlackRock's licking their chops, waiting for the middle class to implode so they can buy up everything on the cheap and rent it back at inflated levels 2 years out. Man, it reminds me of, remember when they said, who was it that said, I think we know who it was, you won't own anything, but you'll be happy. Remember that? I thought this was interesting from Crypto Wolf, XRP Crypto Wolf. BitTrue users are holding over 120 million XRP, and data shows that 91% of users are no longer on XRP. As a result of all that increased interest, XRP USDT became the fastest growing trading pair in futures this week. Now, James Phelan had several updates from the court yesterday. I'm going to show you what I thought the most interesting one was. First of all, Torres granted SEC's motion for an extension of time to file its objection to the DPP ruling. I don't understand why they did that. This one I didn't really even remember. I wanted to go down to this one, I think. Yeah. Breaking, Judge Netburn denies Garlinghouse's motion to compel production of the Estabrook notes. The court states that Estabrook notes are no different from the notes the court previously found to be protected by privilege. The SEC's, then we had Jeremy Hogan weigh in on this one. He says, I expected the SEC to win this motion and agree with the judge. Wait, I think it's the same one. Hold on a sec. Yeah. And agree with the judge insofar as she reviewed the notes and applied the DPP factors. Also, as I tweeted back in February, I don't care too much. Garlinghouse was on the call and he can testify about what was said uncontroverted. So I'm not going to go any further into that, but I do want to show this. Gary Gensler better start, this is what I tweeted yesterday. Gary Gensler better start thinking about the midterm elections. That seat in front of Congress is going to be hot. And this was in response to the Financial Services Committee of the Republicans saying they're sending letters. They're mad at Gary Gensler and his non-responsiveness. And John Deaton says, listen, I really try not to get political on most of the time. So do I. I have voted for candidates for both parties, but I'm hoping the House is flipped for the sole purpose of Gary Gensler having to go before the House Oversight Committee over and over again. He'll likely resign. That's not the first time that John Deaton has said this. He thinks Gary Gensler is going to resign right before his little pencil neck twerp self has to get in front of Congress. Now, we got one thing from Brad Garlinghouse today. Bitcoin tribalism is holding the crypto industry back, according to Ripple CEO. This was at that Paris FinTech conference. Apparently, he got interviewed. Tribalism around Bitcoin and other cryptocurrencies is holding the entire $2 trillion market. Ripple CEO Brad Garlinghouse says, I own Bitcoin, I own Ether, I own some others. Garlinghouse said, I am an absolute believer that this industry is going to continue to thrive. Bitcoin maximalism has meant the crypto industry has fractured representation in Washington, D.C. Well, let me tell you what, folks, and you all may not agree, you may think that this sounds crazy, but I don't think it does. I think that based on everything I've seen, everybody I've talked to, I've even been to the Bitcoin conference and talked to people. Let me tell you what I think. I think that even Ripple did not know just how dirty what was going on behind the scenes was to engineer this market for Bitcoin and Ethereum and then to push out the other digital assets. I think they know now, but I don't think they knew until people online and Twitter and on YouTube started putting out some of the videos. I don't think now I can't prove this, but I don't think even Ripple knew how dirty it was. And I think Brad Garlinghouse is being kind when he says Bitcoin maximalism has meant the crypto industry has fractured representation. I think, and this is just me talking, I think Brad Garlinghouse not only knows that it's fractured representation. I'm the one that's always sitting here doing what I did today, calling out the Blockchain Association and the Digital Chamber of Commerce, because I can't find any real evidence that they're in support of anything except Bitcoin and Ethereum. I think it's much worse, folks. I think there has been not just an active on the part of all these, most, 90% of crypto that comes all the way from Wall Street actively pushing Bitcoin and Ethereum only. But I think they've also been active, and I'm not talking about these two organizations, but I think there's been an active push to block all others out, including Ripple, specifically Ripple, through lawsuits, through government moves, you name it. It's been an active, intentional thing. I'm the digital asset investor. I'm not an investment advisor. This is for entertainment purposes only. Please subscribe, hit the like button, and tell your friends and family that none of this is an accident. And the dirty little secret is that Wall Street in conjunction with the government has been behind Bitcoin and Ethereum from freaking day one. This may never be able to be proven, but that's part of the design of it, folks. I've been around, to quote Al Pacino in Sin of a Woman, I've been around a while,